Netflix delivers another Wall Street victory. The streaming giant posting 16% revenue growth in the second quarter, hitting $11 billion and beating analyst expectations. Netflix also raised its full-year outlook, citing strong membership growth and booming sales. But notably, this was the second quarter the streaming giant simply has not released new subscriber information. Now, the positive results come as audiences are eagerly awaiting new seasons of hit shows such as Wednesday and Stranger Things. Joining us to talk about the streaming giant and its success, Seth Schachner. He is managing director at Strat-Americas and a digital business executive. Seth, welcome to the program.
Good to be here.
Okay, a simply stellar earnings report from Netflix with 16% revenue growth. I want to get your big takeaway from the streaming giant, because remember, when all those red boxes went away, a lot of people thought this company was going to go away.
Yeah, no, good to be here, Sean. I mean, look, Netflix has been in, a global, pretty dominant leadership position in streaming for some time now, and the landscape's kind of evolved where there's two or three big leaders, and I think, to their credit, they're really doing everything strategically to kind of maintain the lead, and it involves a bunch of different pieces, but certainly, they've got to focus on offering lower priced ad supported plans now, which is taking away a little bit from the paid tiers, if you will, but they're raising prices, they're bringing in advertising, and, they've got a tremendously strong slate of content spending that isn't just, say, US centric or, Anglo-centric, it's global in nature. And so you're seeing things like Squid Games and,
Yep.
and all the other services they're developing just appealing everywhere. So they're really doing quite a bit.
Yeah, and how often have you been standing around, you hear a couple of people talk about a program and say, where can I see it? Oh, it's on Netflix. So this growth has been driven by both premium pricing strategies and expansion into new markets. But I want to get your take on the fact that this is the second quarter where Netflix has said, you know what, we're not talking about subscription release information anymore because we're doing great. They don't have to.
Yeah, I mean, they announced it a while back, and I think, I think the focus on streaming generally, not just with Netflix, has been more about how do you operate a business profitably and successfully, whether that's cost reductions or what kind of content you're spending on. And I actually think that with user engagement that follows up is actually a more important gauge to watch. So,
Yeah.
They're really hitting it out of the park, if you will, on that count. And, you mentioned something that's really important, which is that, how do you surface content so people can see it? I mean, it isn't just about actual word of mouth around the water cooler. They use this new interface with AI that surfaces content and brings about recommendations. And I think that's incredibly important because there's so much content that's in Netflix. So all of these things together, I think are really combining to why you're seeing those results today.
And let's dig down a bit deeper and talk about some of the factors that are also driving this strong performance. It's original content and also the investment in global content.
Yeah, for sure. And what's also interesting, they've long had a strategy. Squid Game didn't happen by accident. There's things from Latin America that cross over, from Spain and Europe. Plenty of stuff that's from England as well, and even acquisitions. So they're really a global enterprise, if you will, on the content side of things. But I think what's really remarkable is that if you look at the share of the top streaming titles, there's a lot of competition now. You've got fantastic titles, at least in the U.S., like White Lotus that are coming in. Apple's brought something called Severance in, and so there is competition against them coming in, but they're still maintaining, that leadership position. So while there's competing titles, I don't see the lead going away personally.
Yeah, I want to talk more about that competition. Let's kind of dig there as well, because Apple, it's been successful nearly everything it's done. Disney, with that global reputation. Amazon Prime, owned by the richest guy in the world. These are some heavy hitters. So why has Netflix been doing so well against this intensifying competition?
Well, again, it's a combination of these factors. It's that user interface and surfacing recommendations. I think there's a leadership position that they already have, so that there's shows that are coming back, whether that's a Bridgerton or a Stranger Things or the new season of something. And I think they've really got like a very strong leadership in terms of what I'd call premium content. The biggest competitor that's out there, which you didn't mention, the biggest gorilla is actually YouTube, and it's a very different model. And there's a bunch of sort of stuff between them where one focuses on influencers that has sort of cheaper costs, if you will, for the content, and Netflix is kind of the inverse of that. And I think the real question if those models will start to blend a little bit, if Netflix will try and become YouTube. But look, they've got a very well-rounded offering, Netflix, with content, with AI, with all different types of pricing plans as well, and just this great, robust global machine that's producing content internationally from local markets. So, that's how you build a winning enterprise right now, to be honest with you.
Yeah, and it's not just the programming. When you look at the award shows and you see that, Netflix is behind besides so many of them, and you talked about the subscription fatigue that's out there. Let's talk about some of the innovations that are going on as well, because this streaming industry is doing a lot more to attract its viewers. It's been successful. Interactive content, virtual reality, and gaming integration. This is going to be important moving forward.
Yeah, and I think, even in addition to that, they're kind of starting to look like an old TV network or an old cable network that aggregates a lot of stuff as well. There's live events, boxing, wrestling. They're dabbling in sports. There's been some talk about Spotify, experimenting with live events and award shows. So they are trying to become a little bit of an all things you can be to everyone. And there's a deal in France that was recently announced with something called TF1 where they're just distributing content. So I think there's still a core strategy, but they're trying things to stay, out in front of the competition. I see them very differently than Amazon, than Prime,
Yeah.
which is more of an aggregator. And, I think Disney's the only other one that's sort of in the radar, if you will. I kind of see them as out ahead of everyone else, and the others are kind of also rans.
Good stuff. Seth, I can't thank you enough. Great insight, my friend. Thank you.
Thanks, Sean. Good to be here.